We are living through an AI gold rush, right? The opportunity feels absolutely huge, but let's be honest, so does the uncertainty. If you're an investor, the ground is shifting under your feet every single day. It's almost impossible to know where to place your bets.
And that really is the million-dollar question for anyone investing today. How do you get in on this revolution without, picking the wrong horse? Because betting directly on the next big AI app, well, that can feel a lot like buying a lottery ticket. Today's winner could easily be forgotten tomorrow. So how do you get a piece of the action of this massive upside while still managing the very real risk that comes with it?
Well, believe it or not, the answer might just be over 170 years old. To figure out a smart way to move forward, we actually have to look back, way back, to the California gold rush. That's where a really powerful investment strategy first took shape. You see, back during the gold rush, the people who made the most reliable fortunes weren't actually the miners themselves. It wasn't the folks risking it all for that one lucky strike. Nope, the real money was made by the merchants who sold them all the essential gear. The picks, the shovels, even the sturdy denim jeans. And that's the heart of the picks and shovel strategy. Instead of betting on one miner to strike gold, you invest in the companies that supply everyone.
Okay, so this isn't just some quaint story from the 1800s. We've actually seen this exact same dynamic play out much more recently, in a tech revolution many of us remember very well, the dot-com boom.
And here, you can see that contrast just laid bare. On one side, you've got the hype. Remember Pets.com? Raised a ton of money, burned through it, and then, poof, gone in less than a year. But on the other side, you have what we'll call the plumbing. These were the companies like Cisco, the ones building the actual routers and switches that were the internet's backbone. They were providing the essential infrastructure that everybody needed, no matter which website ended up winning or losing.
And just look at this number. This really shows you the power of that plumbing strategy. Between 1995 and 2000, while all those dot-coms were booming and busting, Cisco's revenue grew by an absolutely staggering 850%. Why? Because they were selling the essential tools to everyone.
Now, when that bubble finally burst, the popular story was, see, the internet was just overhyped. But that narrative missed a really critical point. The hype wasn't wrong about the technology. The internet was every bit as transformative as people thought. The hype was just wrong about which companies would ultimately win. The revolution was real, it just needed the right foundation to be built first.
All right, so that brings us right back to today. Who are the shovel sellers in our current AI gold rush? Well, to figure that out, we need to look at the ecosystem in, say, 3 critical layers of infrastructure.
Okay, first step, the brains of the operation, the semiconductors. You've probably heard of NVIDIA, right? They design the high-end GPUs that are absolutely essential for training AI models, but they don't make them. That's where a company like TSMC comes in. They're the world's leading foundry that actually manufactures these incredibly advanced chips. And then if you go even one level deeper, you find ASML. They build the unique, highly complex machines that TSMC needs to be able to produce those chips in the first place. See? It's a chain, and every link is critical.
So you've got the brains. Next, you need the foundation, the actual physical infrastructure. All those powerful chips need a place to live, and that means we're seeing a massive build-out of new, very energy-hungry data centers. And this opens the door for companies you might not immediately think of. You have United Rentals, who rents out the heavy machinery to build these places. You have Eaton, which provides the critical electrical systems to power them. And then you have more specialized cloud providers like CoreWeave, who focus specifically on delivering the immense computing power that AI demands.
And finally, we have the platforms. This is where the big tech giants really come into play. Amazon, Microsoft, and Google. They've essentially become the ultimate digital shovel sellers. Through their cloud services, they're renting out access to their massive server farms, letting pretty much anyone tap into the huge amounts of processing power needed for AI.
And the genius of their model is that they profit from the total demand for AI computing. It doesn't matter to them which specific AI model or app becomes the winner. It's a perfect example of that classic infrastructure play, just on a scale we've never seen before.
But, and this is a big but, selling shovels in the AI age isn't a risk-free game. Not at all. This is an incredibly expensive business to be in, and building the future costs a lot of money.
For these huge infrastructure players, their competitive advantage, what investors call a moat, it isn't just one single product. It's the whole, incredibly complex and expensive ecosystem they build. That creates a huge barrier for anyone trying to compete. It gives them a real advantage,
But it also means they have to keep spending massive amounts of money year after year just to stay ahead.
And when I say massive, I mean it. The scale of this investment is just staggering. Take a look at this. For the big cloud providers, capital spending is projected to jump from about 12% of their revenue in 2023 all the way to 34% by 2026. That is a huge leap in spending, and it tells you this is an all-out arms race to build capacity.
And how are they paying for this arms race? Well, to finance it, just a dozen or so of the biggest tech companies in this space have taken on nearly $1 trillion in debt. Think about that. That is an incredible amount of leverage.
Now, when you have investments this big, the financial stakes are incredibly high, and you can be sure that sophisticated investors are paying very close attention. We can see it in the market for something called credit default swaps. You can think of them as basically insurance policies on a company's debt. And what we're seeing is that trading in these insurance policies for the key AI players has more than doubled. What does that tell us? It signals that there's some real concern out there about whether these massive investments will actually pay off in the long run.
So, all this talk of huge spending, mounting debt, and investor nervousness, it naturally leads to the one big question on everyone's mind. Are we just living through another dot-com bubble?
Well, when you actually compare the numbers, some pretty important differences start to show up. Back in the dot-com era, the boom was really driven by brand new startups that, frankly, weren't making any money. Today, it's being led by some of the most profitable companies the world has ever seen. Valuations are high, for sure, but they're not quite at those dot-com mania levels, especially when you compare them to actual earnings. And maybe most importantly, the money is being spent on real, tangible infrastructure, not just on Super Bowl ads and marketing hype.
Or to put it another way, this current rally seems to be much more connected to actual profits and cash flow. Unlike a lot of those dot-com darlings that had great stories but zero revenue, the big players today are absolute cash-generating machines.
So, what's the bottom line here? The picks and shovels approach is really a way to get exposure to the incredible growth of AI. But you're doing it by betting on the fundamental underlying trend, this unstoppable need for more data, more powerful chips, and more computing power. It's a way to shift your bet away from a single high-risk company and onto the essential infrastructure that everyone is going to need, no matter what. You know, the dot-com bust was a painful time for a lot of investors. But when the dust settled, it left behind the plumbing for the entire modern internet. So the big question for us today is, as we navigate all the hype and all the risk of this AI boom, what is the permanent world-changing infrastructure that's being built right now, right before our very eyes?